Hey, my name's Doug, and because I get questioned throughout the year about supplemental coverage through a lot of my clients, I thought it would be a good idea to put together a quick video just to go over coverage options so that people at their own convenience can view it, pass it on to coworkers, so that they're able to learn about what options that they might have through their jobs. Now, supplemental coverage is designed to pay you. There's multiple different options. Somebody can choose one, several of them, just whatever they feel is appropriate. And a single event could trigger a claim payment under each of them. They just pay in different ways. And hopefully, I'll be able to explain just the basics of what those ways are and why they might benefit you. Uh, the one exception to that is life insurance. Life insurance isn't to pay you, it's to pay your family or your beneficiary if something were to happen to you. And within life insurance, there are two basic types. You have a term or a temporary coverage, and you have a permanent coverage, which is like a whole life or a universal life. A term, you would choose a period of time of, let's say, 10 years, 20 years, or 30 years. Whatever term you choose, you don't have to keep it for that period of time. The insurance company is just guaranteeing the price will stay the same for that period of time that you choose. Um, if there's a death benefit to be paid out, it doesn't matter whether it happens on day one or on the last day of the policy. So there's no vesting. Um, but, but it's the most cost-effective way to get larger amounts of coverage. So it's a really good way to address that. What if something happens to me while my family's depending on my ability to gain an income, or I have certain expenses? Well, I have certain expenses like a mortgage or what have you. A permanent policy, like a whole life policy, is a good way to deal with the when. Um, because when we die, and it's very statistically likely that one day we will, um, there's certain expenses such as burial, other concerns that we might have. Well, having a permanent policy can give us a way to address that. Um, However, because the whole life or permanent policy is much more expensive in the majority of cases than is a term. Um, uh, in my experience, a lot of times people will get the most of their life insurance through a term coverage and get just a little extra through like a whole life or a universal life, which, in addition to having a death benefit, also has cash value. It's really important to understand how that cash value works, though, because it can be quite a bit different within different policies. It's also important to understand what the term is because there can be different variations in that, such as an increasing benefit or a decreasing benefit, although those are less and less common. There's also some features that might be available that it's really important to understand and to get explained to you. Um, Now, as far as the supplemental options, the things that are designed to pay you, the first off you have is like what they call a critical illness policy, or a specified illness policy in some cases. Now, you would choose a benefit amount, let's say 10,000, 25, or $50,000, kind of the same way you choose a benefit amount in life insurance. The difference is it's not death that causes the claim, it's somebody having one of the defined illnesses, the specified illnesses, such as a heart attack, stroke, kidney or major organ failure, and sometimes the diagnosis of internal cancer. When somebody has is diagnosed with one of those, the benefit that they choose, that 10,000, 25,000, whatever it is, would be payable to them. Um, and because in most cases, it's the age that somebody signs up for it that causes that determines the price for the rest of the policy. As somebody gets older, the policy doesn't increase in cost. Um, in many cases, there is cancer is broken out separately. Whilst somebody might have an initial diagnosis benefit for cancer, and while they are having treatments, it might generate more revenue from the policy. That can vary from company to company or program to program. Um, Now, another policy that's becoming increasingly popular as hospitalizations have gone up is a medical bridge policy. Um, the purpose of that is to help people deal with the first dollar, the initial expense that they realize that they experience if they were to be admitted to the hospital, have an outpatient surgery. Um, because it pays out some money for those things. It might not completely reimburse them or cover their expenses, but can go a long way towards helping them with those. Um, the two most popular plans by far, and the two that I get the most questions about, are accident coverage and disability. Um, they a lot. They work very well together, although they're separate policies, because they can cover a lot of very common things. Um, the accident plan, I'd say, is the greatest value that's available because the cost per year for an individual is usually around $300, give or take. It doesn't take a very significant injury to cover the price of that for the year or for several years. And frequently, claims, especially when somebody starts breaking bones or gets admitted to the hospital for an accident, can go into the thousands, if not the tens of thousands of dollars that are paid out. So I'd say it's from a value standpoint, it's probably one of the greater values that's available for the within the supplemental market because it just pays out for a variety of accidental injuries and things like that. And in most cases, whether it happens at work or away from the job. Um, the disability is, I'd say, the most important because that's direct income replacement. If you get injured or sick and you can't work, it provides a monthly benefits to help you pay your bills and have a check coming into you while you're trying to get better. Um, Now, there's three main aspects to a disability policy. You have how much it will pay you, how soon it will pay you, and how long it will pay you for. Um, and those will determine what the benefit is. And it's important to, if you have other types of disability coverage, either through the state or perhaps through long-term disability through your place of work, it's good to know um, how those work and how they might be affected, so that you can strategize your benefit that will make most sense to you. Um, Now, the reason I say that both the accident plan and the disability plan kind of work well together is, let me give you an example. If somebody was to have an accident plan and they have a disability plan that pays, let's say, $2,000 a month, they break their leg and they miss 3 months of work as a result. Um, the accident plan would pay, in most cases, between about $1,000 and $5,000 for the break itself, depending on how they broke it and what kind of treatment they received afterwards. The disability plan would then pay $2,000 for each of the 3 months they're out. So it can be, they can both work in harmony to just protect you and help you with your expenses you might receive and to keep that paycheck coming into you. So that's pretty much the long and the short of it. Please let me know if you have more questions. You should have my cell and my email, and I'll be more than happy to assist you. Just remember, text message is the best way to reach me, and I look forward to hearing from you. Take care.